Welcome back to the Neuro Finance Masterclass. We are officially on day 70 of our 365 Days to Financial Freedom series. That's right, and today's explainer is tackling a massive fundamental question for your financial future. What exactly are you buying? We've previously covered automating your buys with dollar cost averaging and how to build a rock-solid long-term mindset. But today we are diving deep into the absolute magic of index funds and ETFs to establish a deeply empowering foundation for your portfolio. Let me ask you something. If 90% of Wall Street pros completely fail to beat the market, why on earth are you trying to?
Seriously, it's something we see all the time. The average amateur spends their entire life just exhausting themselves. They're constantly hunting for, the next Apple or the next massive crypto coin. It's like they're frantically searching for a microscopic needle in a massive, chaotic financial haystack.
Oh, it's totally an exhausting trap. And honestly, it is built on a fundamental misunderstanding of probability. We really need to face this highly humbling reality head-on before we can build any real wealth together. Which brings us to Section 1, the individual's stock trap, and the staggering reality of picking single stocks. Now, what's really interesting here is the sheer scale of the disadvantage. When you try to pick single stocks, you're stepping into a ruthless arena. You are going up against seasoned professionals with multi-monitor setups, Bloomberg terminals, Ivy League degrees, and algorithmic bots making moves in literally fractions of a millisecond.
Right. And despite all of that firepower and insider access, statistically, 90% of professional fund managers fail to beat the market over a 10-year period. Just let that sink in for a second. 90%. Over a decade, 9 out of 10 of these guys fail to outperform the general market.
It's mathematically absurd. These are professionals. Their entire existence, day in and day out, is to analyze businesses and pick winners. If the absolute pros with practically unlimited resources can't consistently find the needle in the haystack, it makes zero sense for everyday folks like us to gamble our hard-earned money trying to do exactly the same thing. Let's move on to Section 2, buying the haystack. Introducing the architect's favorite tool. This reality pushes us into a completely different, infinitely more powerful paradigm. We are officially dropping the chaotic gambling mindset of the amateur. Instead of playing a rigged, losing game, we're just changing the rules entirely. And the solution? It is brilliantly captured by John Bogle. He's the legendary founder of Vanguard, essentially the pioneer who revolutionized retail investing for everyday people. He famously said, "Don't look for the needle in the haystack. Just buy the haystack." I absolutely love that quote. It is not just a clever little one-liner, it's an intensely educational philosophy. It is the ultimate anchor for stress-free investing. You don't need to exhaust yourself hunting for one winning stock if you just systematically own all of them. So how do we actually do that? How do we buy the haystack? Well, today we are introducing you to the ETF, or exchange-traded fund. At its core, think of an ETF as a basket, just one single basket that holds hundreds or even thousands of different stocks.
Yeah, think of it like buying a massive variety pack of your favorite candy instead of betting your entire month's allowance on just one mystery flavor. If you bet everything on that one mystery flavor and it tastes terrible, you're totally ruined. But with a massive variety pack, if one single flavor is a dud, it barely matters because you still got hundreds of incredible ones carrying the weight.
Exactly. When you buy just one share of an ETF, you are instantly transforming your portfolio. You are no longer betting on a single company's success or failure. Which leads perfectly into Section 3, the S&P 500 benchmark, the ultimate benchmark of human progress. To really grasp the power of this basket concept, we have to look at the most famous one out there, the S&P 500. This is widely considered the ultimate benchmark of human progress. It is so much more than a financial index. It's literally a mathematical, living representation of corporate survival, constant innovation, and human ingenuity.
Precisely. When you buy an S&P 500 ETF, boom, you instantly become a fractional owner of the 500 most powerful corporations in the United States. With one single click, your basket suddenly holds Apple, Microsoft, Amazon, Tesla, and 496 other massive juggernauts.
And here is the true magic of this particular basket. It has a built-in survival mechanism. It is ruthless. We are talking Darwinian capitalism at its absolute finest. If a company stops innovating or underperforms or starts failing, they get mercilessly kicked out of the index and are immediately replaced by a stronger, growing company. Because of this self-cleansing feature, the basket itself stays incredibly resilient.
And let's look at the historical results of that ruthless, self-cleansing basket. Historically, the S&P 500 has returned about 10% per year on average over many decades. By simply owning this index fund, you're guaranteeing that you capture this steady, historic growth. And honestly, the best part? It's completely stress-free. Earning that 10% doesn't require you waking up in a cold sweat at 4 a.m. to check your stock portfolio or obsessively refreshing financial news. No way! You don't have to be a genius trying to pick the one winning player. Not when you can just simply own the entire stadium where the game is being played. That brings us to Section 4, the only free lunch. Why diversification is your ultimate superpower. This introduces a deeply held concept in finance. You'll hear people say that diversification is the only free lunch. What that really means is, through an ETF, you can drastically reduce your risk without necessarily reducing your expected returns. You get all the benefit of broad market growth while simultaneously shielding yourself from devastating individual losses.
Right, let's contrast two mindsets here to paint the picture. Think about the amateur. The amateur throws all their money into one single hot tech stock. If that stock crashes, their entire portfolio goes up in flames. Their neural fitness is completely shattered by the stress from a loss.
But now, contrast that with the architect. The architect owns an ETF. If one single company in that massive basket of 500 crashes or goes bankrupt, they barely even notice it. The other 499 companies effortlessly carry the weight and keep the portfolio moving forward. An architect is building a stress-free empire, and there is absolutely nothing more stress-free than diversifying across everything. All right, Section 5, building your foundation, taking control of your financial empire. It is time to take control of your financial empire. So for today's cognitive task, we are challenging you to step up and research the top 3 largest ETFs in the world. Pull up their charts, look really closely at their performance over the last 10, 20, and 30 years. Host A, look at the data for yourself. Observe the undeniable power of long-term compounding when you own the entire market. Once you really internalize that data, you'll realize that by buying the Haystack, you are absolutely guaranteed to get the market's return. Host B, stop trying to outsmart the world and start owning it. Seriously, let go of the amateuring anxiety of trying to beat the 90% of professionals who are already failing. Choose the path of the architect.
Which leaves us with this final thought. The architect doesn't gamble on who's going to win the race. They don't sit around sweating over which car is the fastest on any given day. They simply own the track. So, are you ready to stop gambling, step into the architect mindset, and finally own the track? Think about that as you tackle today's cognitive task. That wraps up our explainer for Day 70 of our 365 Days to Financial Freedom series. Keep building that Neuro Finance foundation, and we will see you right back here for Day 71.